Maybe you shorted notes or bonds or long yen. So we can't click the mouse for you. All we could do is provide our analysis. Okay, Nikita, nice. All right. So are you a member, Nikita, of Forex Analytics? Just curious if you're a subscriber. Thinking. Okay, well, here's my next call. Peel off some of those profits. Oh, do you? We love to have people that are contributors. So it's a good place to join. You get into the community and you pay it forward and help out some people that aren't where you're at yet. Just a suggestion. You plant good seeds, they come back to you. Okay, Peter. So, all right, Nikita. Nice to meet you as well. So, yeah, gold's bouncing back, silver's bouncing back. It's too volatile for me to trade. When I was trying to short it on its way up, I was using $20 stops, and I thought that was enough tolerance, and it wasn't, especially on the way up. But um, the recovery is not that uh, impressive yet, and we've almost gotten to this 1820 level. So I don't know if we're going to shoot to new highs. I can just say this, that I think that this is a correction and there are new highs to come. Anyone know why I think there's new highs to come in gold and especially silver? Anyone take a guess here? Why I think that's possible, especially in gold? That's right, Midas. I mean, you don't normally. Oh, I've had this starting to happen on my trading view today where I pick the chart and then it disappears. Anyway, I think it'll show up in silver if I get the RSI here. This RSI reading at the high is almost 90, and gold was as well. So TLT, TLT still looks negative to me. So we're talking about it up here. And then I'm just going to wrap it with this, that despite one of the reasons why I thought there was going to be a gold correction, and I showed it to attendees on Face for a couple of weeks, was Newmont not performing, especially last week with gold up 60 on the week. It ended up being unchanged. And there you go. You have Drive 2 underway. So we'll see. I still think there'll be another high in gold mining shares too. And here's the GDX, pretty negative week. But, I was taught that the miners should lead the physical bullion market, and it was doing it all the way to here. And then the physicals took over, and all we got were marginal new highs with all kinds of divergences on the miners. And now we're in this correction phase. Not sure how deep it's going to go, but looking at this gold that I can't see right now, um, I think we got close to that 1820 level last night. So, dollar hanging in there. Definitely the preferred long with the dollar going up. It's kind of a lazy rally. It really has to close over 94 to accelerate. We get through that, just a measured move is going to take you to important resistance up around 95, 95.50. So we'll see if the dollar could maintain it. But obviously, between the two, the preferred long was US dollar yen. And then I'll just wrap it with what I talked about on Monday. I was showing the weekly in Aussie that it had stopped right at the 200 week moving average up here. And we have a little bit of a negative week here. And I really think that there's a chance down the road, especially if the dollar could rally above 94 and start heading up, that we could see lower levels. Maybe you pull back to the moving average. The 50 is around 67.30. So those are my thoughts for today. Any questions on any of that? Hope it's adding value to what you're trying to accomplish as a trader. And if it is, just like Nikita, you may want to pay it forward and say thank you, become part of our community, and help other traders. And also help yourself. Okay, so Blake, how you doing today, buddy? What's new with you?
You know,
We will.
I'm actually a little irritated this morning because my charts are really having a problem. If you guys use TradingView,
Yeah, they're
um,
disappearing.
yeah, they're disappearing, and it seems like it's just North American traders on certain feeds. So it's going to be a
Uh,
little bit more challenging for me to do um, the bias chart, but we'll get it done. I just have to pull up different. It's made it really difficult for me to do some updates on Forex Analytics as well as a result. So um, yeah. Anyway, it's just kind of a pain in the butt. That something. I guess it's first world problems because really, I often joke about first world problems because really they are. But when I was in the military, for those of you that don't know, if you haven't heard me say this before, I was in the Marine Corps from 1990 to 1994. I was in the infantry, so I didn't have a desk job. I was what they call a grunt, bullet stopper, ground pounder, whatever you want to call them. That's what I did. And one of the places I got to go to is I got to go to Africa, and I went to Somalia during the whole Black Hawk Down situation. Except we were the first ones there. Not that happened about 9-10 months after we had already landed. So it's probably about 6 months after I'd already left because we just went in, took over what we had to take
they
over, and
they don't
got out.
complain about TradingView down there in Somalia, Blake?
No, but the thing is,
Oh,
I was 21, I was 20 or 21 at the time. And at that point, I mean, we were feeding. Well, the whole reason why we were there is because there was like three different terrorist groups that were cutting off all the food for all the locals, right? For anybody who's like in Mogadishu and outside of Mogadishu, it's like terrorist factions, right? So we had to go in and clean them up, get rid of these three terrorist factions so the United Nations could come in and feed. So the last part of our month and a half stint there, the last 2 weeks was really just guarding United Nations food trucks as they were coming in and making sure people could eat. And so I really got an opportunity to see the people, not just the gun-toting kids, that you see pictures of, like kids, toting around AK-47s, which is completely accurate. But what I got to see is the local indigenous people and how they were suffering. And so ever since then, I really try not to complain about too many things, especially like TradingView charts. So yeah, it is a first world problem. But I'm not going to use Bloomberg because I could use Bloomberg, but I'm just not very fast on it. Bloomberg is a kind of a clunky chart system. You can do it, and I bet you could become proficient over time. It's not easy. It's like you're like, okay, I want to go into doing moving averages, and then I need to click on the moving average, and now I need to make an adjustment, and it's just like not very, it's just not very user friendly. So I'm not going to do it via Bloomberg. So what I got to do is do this. So I have to pull up individually currency pairs right now, one by one, and pull up different data feeds. So you guys are gonna get a little bit different flavor today because I'm gonna work from kind of the ground up charts that I haven't done yet. So and I'm gonna try to do this quickly because of time restraints based on I have to do some drawing here. So what you'll notice that we're going to start off with the euro dollar. And by the way, if you got up this morning and you're like, what the hell are stocks doing way up here, and why'd the dollar get its just pounded overnight? There's no real good logical answer to any of that, and that's why you're seeing a snapback in some, some currencies. No one, everybody that I've read, all the analysts that I normally follow, they're like, yeah, you can't put your finger on any one specific thing that's really making this happen. So this is the euro dollar, and if you look at the highs here to the lows, the 38% retracement comes in at 117.90. This 78% retracement comes in at 117.90. So I'm going to make the assumption right now 117.90 is going to be good. It's a good confluence, so it's going to be good resistance today. Whoops, 117.90. We are still bullish, and you can see just how we bounce off the 117 level. And 117, obviously 117.10 was the low here, but really 117 is going to be key. I mean, that's just, there's no if, and, or buts about it, right? That's it, 117. We are in a 117 to 119 range right now, and we are near the lower end of your range. So obviously you got to be a little bit more careful as we are down at these, at these levels. All right. Let's take a look at, now this is what I have to do, because watch, if I pull up the cable, this is what happens. So this is on this is the FXCM feed. It happens on a couple of the other feeds too. And you can see all my drawings are still there, but all the data disappears. This has been problematic for me today. So what I got to do is I've got to go like this. And I think if you're in North America, it's probably happening to you too. You got to go down and pull up a different data feed. And then, as you can see, I'm going to forex.com. Problem is I haven't drawn on these. So we're going to have to do a little bit of freehand work. So as of right now, we are really testing key support. We have a wedge. You could actually look at this as a head and shoulder pattern, right? If you want, could look something like that. But the bottom line is we're testing pretty key support. And you guys should know that this support here, 129.90, 129.85, really key support right now, okay? Any rally back towards, you can see this previous support, should be current resistance, and that comes in at 130.60 right now, 130.60. Okay, we are still bullish, but the cable is definitely underperforming right now, so just think about that as we move along. All right, let's go over to the Aussie. So here we go, right? Disappearing data. I just do it just to make sure. Here's the Aussie, and the Aussie is traded heavy. And for those of you that are not aware, I have a pattern in play on the Aussie. I took about 100 pips off of it last night, off of partial of my position, but it's still a pattern in play because I still think the Aussie is underperforming right now. But I just was pulling some profits from last night because we were short up here at this 72.20s up at these levels. But as you guys know, 70, 75 is really key resistance. It's right here, basically. I don't have to beat it up too much because you already know what it is. 70, 75, let's see what kind of supports we're dealing with right here. So 78% retracement comes in at 71.10, which is basically the low. So we have 70, 75, obviously that's key. 70, what I say, 71.10 is support. Intraday, we are, I still have to say we're bullish. You guys hear my argument every day. I still have to say we're bullish because we're above that 70-70, but man, both the Aussie and Kiwi are not looking as hot as they once were. All right. So right now, resistance should be if you take it from this high here, I mean, any rally back up to 71, 50, 60. I mean, that's really going to be resistance. So 71, 60. Okay, let's go over to the Kiwi. The RBNZ is actually expanding their asset purchase program, and it the New Zealand dollar got hit, but it's been a limited downside. We kind of got hit ahead of the RBNZ, and we've just been consolidating. But let's not ignore the fact that we are back below 65 cents, and this is a big deal to me, or 66 cents, right? We're back below that. Now, obviously, the next support is right here at 65 cents, and below 65 cents, and then we got a little bit of a problem, right? You can see the Kiwi is actually breaking this uptrend line. So I think a break below 65 cents is coming. But just, be really careful. Be really careful if you're long the Kiwi, because it looks very vulnerable. And any move back up towards now, if we get any move back up towards 65.80, that's an area to sell it, I would think. So now, instead of being bullish, we are in a range with the Kiwi. As I warned you guys the last couple of days, if we drop below 66 cents, that's going to happen. So it's happening. All right. Let's go over to now. The dollar Canadian is trading really heavy. It's very frustrating. Very, very frustrating. I've been trying to play this thing on the long side on this false breakdown below 133, and it's just it's not playing ball to the upside. But okay, what you can probably look at it as right at this moment is something that looks more like this. I'm just going to roughly draw this, but it'll look something like this, right? Meaning that we are in a consolidation. So I'm going to say 33.40 is resistance, 133.40. And 132.65, which was the 78% retracement yesterday, just in case you missed that. Right here, 68. So I'm going to say 70. I'm going to keep it in range right now. Because of that false breakdown that we had last week, but I'm not 100% convinced at this point in time that it's going a lot higher. We have to start breaking these. This is a big channel. I mean, we have to break that channel resistance in order for me to turn bullish. And that's a fact, and that doesn't happen until we get above 134 really. So but obviously any rally towards 133.40 is going to find some resistance now. Okay. All right. So I'm not bullish the dollar Canadian, but I am thinking that a counter trend bounce is brewing. Grab my drink really quick. Well, I got a lot of work to do in a very short period of time to do it. Swissy. I think it's Swissies. We're dealing with the same thing. You guys know that the 90.50 support, 92.40 resistance, still a thing. And I would probably just leave it alone until you see a breach of one of those two places. So 90.50, 92.40. It is bearish while we're below that 92.40, because you guys have to remember this. these are all bad prints. Problem with using a different data feed. We're below like a multi. It looks something like that. Okay. All right. Let's go to dollar Mexican peso. So the dollar Mexican peso keeps bouncing from 22.30. Now, yesterday we went through 22.30, which was actually the 618 that held. We talked about this yesterday as the 22.25. So we dipped to 22.25 yesterday, basically, and found support. So that is going to be pretty key support here. 22.25. That's what I wrote down yesterday. 22.25, and resistance still is 22.60, and we are range bound right now, and it's very frustrating. The dollar peso, I mean, it's just bouncing around, like, just bouncing around between wildly too. I mean, just who knows the reasons why. It's just bouncing around, probably because the lack of risk aversion follow through type of thing. But anyway, that's that. Next would be dollar Swiss, got it. US dollar Norwegian krona, let's deal with that. I don't think a whole lot's changed here. It's back down again, but we have this major trend line that comes in through here. You guys may remember it goes all the way up. I mean, from way up here, looks like this, right? And I think support is building something like this. So, I mean, here's what we're dealing with. 905 now and 893. Okay, let's just write those numbers down. 893. Oops. 9.05. I know this number keeps getting lower every day. That's because you're dealing with a descending trend line. So it's going to happen. And while we're below this resistance, it's bearish. Dollar yen. Dollar yen. So if you guys are Forex Analytics subscribers, you guys already knew this was happening yesterday, right? We broke this channel. Once we broke above 106.50, like Dale said, I know I've been mentioning it here, but I just don't want to be short, because I know that below 104.50 is finding buyers. That doesn't mean I don't want to short dollar yen. I just know it's we're the risk was for higher, and especially with yields bouncing, I'll be a little careful. So here's a 50% retracement, comes in at 107.04. Next resistance beyond that, I mean, I'm going to write down, because of all these spike highs, 107.70. And we are not bearish. 106, 106.50 is going to be support now on dips, because that was, right here, breakout point right there, right?
We also have a pip going on yen, don't we? From Greg?
Yeah, Grega does. Yeah. Greg, I mean, his pattern in play
in the money.
was, he was a buyer, 105.60. So yeah, he's been a buyer since down here. Okay, I'm sorry.
I'm sorry, bro.
No problem.
I'm just bragging about our team. That's all.
Okay, thank you. Because I don't give those guys any compliments at all, ever.
You're tough.
They don't deserve it.
That's a first world problem, not to get attaboys.
That's right. They don't get attaboys over here. We don't give a trophy to everybody. Give you a participation trophy, Andre, if you're listening in. Just kidding. Supports at 92.50, resistance 94. Same. It's the whole. This is the range, but we are in a bearish trend. 90. Are you okay?
Who, me? Yeah.
Yeah.
I'm just rolling around on my chair.
Oh, I heard a lot of grunting and moaning.
Oh, so. Yeah. No, I'm okay.
Who knows
Okay,
what's
good.
happening over there?
Yeah, I know. He's like rolling around like, oh, my butt cheeks hurt. Why do your butt cheeks hurt, Dale? All right, let's talk about gold, because gold was just got absolutely clobbered yesterday. Let's go to XAU USD, and I got to pull up a different feed here. So here's gold. All right, so gold just got absolutely destroyed yesterday, and obviously we bounced back, but you can see we slammed through the all-time highs, right?
Yeah.
Now we're bounced back up, and I would assume that now we're in a consolidation phase. So this is the way I'd be looking at gold. You probably want to be a buyer below 1900. You probably want to be a seller above 2000. That's, I mean, if you're just looking to like kind of trade it, you know what I'm saying? That's how I would be approaching gold at this point. Is like, the shakeout.
It'll be more two-way here now for a while.
I think so too. Yeah. So right now, I think support's going to be, you're going to find support at 1900, and then any rally back up towards, well, the 618 is going to be at 1994. So any rally back up to 2000 is going to find resistance now. So 1900, 2000, and you still got to. I think you still have to be bullish gold. I mean, don't disregard the fact that this has been a massive move. This is, I mean, you look just since the Fed went crazy, that would be right here, right? I mean, we've gone from 1400 to what is that from a percentage standpoint? I mean, we've gone. I mean,
40%.
40% rise. I mean, and currently we're up 30%. I mean, that's a big move for the precious metals. Of course, we're going to see a pullback and a consolidation. That's what we're getting right now. I just think that that nothing has changed in this dynamic. So you gotta just imagine that gold is still going to be pressured. By the way, we have CPI just came out. Shoot, I missed it. What inflation data come out as? Did it come in hot?
It came in a little bit better than expected, yes.
Yeah, well, after the PPI yesterday, we'd have to expect that. So yeah, okay. Oh, crap. I can't pull up my charts.
What's that?
I don't think you Europeans are having the same issue as I am. So
That's a nice
I think
looking.
do you guys have any issues with your trading view?
Not me, no.
Yeah, like I think it's the servers us North Americans are hitting. So anyway, I'm going to just quickly do S&P. Let's do it this way. There's your S&P, and
problem is on the West Coast. Ziggy has had no problems, he said.
Yeah, I was talking to Michael in our chat room, who is also in California. So I think it's our servers that we're hitting.
Yeah.
So anyway,
got COVID.
33.25. Oops. And 33. What is that? I mean, 3,400 is obviously big resistance, but 33.86. So.
It's going to be a failing rally in S&Ps today, huh?
Well, I mean, inflation's come in a little stronger. PPI did yesterday, CPI. Yeah, I mean, stocks might give back some of these gains at least today. So, anyway, there's your bias chart. I'm going to pass it to you guys. It's very frustrating trying to plot my chart, so I'm giving it over to Steven Stelios. So, good luck to you guys.
You too, buddy. I'm glad you could use Bloomberg the rest of the day, man.
What's that?
All right. I'm glad you have Bloomberg to use to trade.
Yeah, I mean, hopefully. I hate, having these, as a trader, you flip through these charts quickly because I'm constantly looking at stuff. So anyway, all right.
Yeah. All right.
Have a good one, guys.
Bye-bye, mate.
Thank you.
Thanks. Thank you.
Hello, Steves.
By the way, Bloomberg is probably one of the toughest and most weird things to work.
Yes.
I used to work with that for 10 years, and man, it just evolved from something over the years, and it was quite difficult. But anyway,
yeah, it's horribly built because it's like something that was built initially to have like 2 floors, and then they had to keep building on top of
Yeah,
it.
yeah.
Yeah.
Okay,
I heard
so
it stops working if you have a large soda, which Michael Bloomberg made illegal. So
Oh,
if
yeah.
so if you're drinking a large soda in front of your Bloomberg, it shuts down.
So, today overnight, so we had like Blake mentioned, equities sold off quite sharply yesterday, late in the session, as it seemed that there was no agreement in sight in the US for stimulus talks, and but now we're back buying the dip again. So I don't know why, but that's how it is. The important thing to say is that Joe Biden picked his running mate, who is Senator Kamala Harris. Everybody seems to think it's a very good choice. I'm not an expert in US politics, so I don't really have an opinion, but it seems to have been accepted quite positively. We wait to see how polls are going to show going forward. So far, Biden is ahead, but we know how polls can be, and as we run into November, things can change a lot. That's for sure. Data-wise, we had the RBNZ late last night or early this morning, depending on where you were. They didn't change rates as expected. They were a little bit more dovish. They did say the Draghi phrase, will do whatever it takes. And the markets found that, didn't like that too much. So the Kiwi is underperforming slightly today, but it is underperforming. And that was the RBNZ. We had data out of the UK. GDP came in at minus 20.4% quarter on quarter. I still can't believe we're saying numbers like this, compared to minus 20.5 estimated. So there you go, it's slightly better. Same with industrial production, manufacturing production, all marginally better, but really nothing to write home about. And obviously we had CPI in the US just now, which is running a little bit hotter, but still way below target. The thing to just be aware again is what's happening with COVID, and we are seeing various places in the world where things are hotting up again. So it's not a slam dunk or a done deal that we're out of it. Far from it, I think, unfortunately.
Are the kids going back to school this fall?
Here in Greece,
Yeah. Yes.
For the moment, yes. But I think it's going to be some kind of controlled environment, just like it was before we closed. So 1 day on, 1 day off with masks and stuff. I don't know. I really don't know what's going to happen. But
no one does.
This is the big question everywhere. You can do
we still have some time for them to decide, because at least here schools open up around the 10th of September. So keep in mind we're 1 month away from the official date, because I know you guys there in America, in the US, you start school earlier in the year. So
it used to be after Labor Day, but kids start earlier now in late August.
Yeah.
Oh, they've already started in Georgia. They've had positive cases in schools.
Yeah, the main thing, you're absolutely right. I say to my wife, look, no matter what we do, if kids go to school, we can forget everything. It's as if we're out there taking no precautions whatsoever, because you can't tell a kid to, stay away from its classmates. It's impossible. Anyway, it is what it is, and let's see what happens. The other thing we need to talk about is metals. We did talk about them earlier today. Blake did, and I wrote on the chat room as well. I think this correction lower will continue. I think there's a lot of people who want to buy the dip, because in the long run, metals should be going a lot higher. I understand them, but I think that we're a little bit early in buying the dip. So I am personally waiting for 1800 in gold and around 21 in silver. But these can be very whippy, and they need a lot of patience, I think. So better to be just to weigh things and see how price action develops, rather than just barging into a position straight away. That's my opinion. So apart from metals, not a lot of moving, just equities just grinding higher for no apparent reason.
Stelio, just a comment that has to do with fundamentals and the metals.
Yes.
I don't know if you know
fundamentals.
Metals. Yeah, I don't know if you've noticed. People don't seem to be paying so much attention because the numbers are still low. And I mean, it makes sense. We're in the middle of a depression, in a sense, with all the COVID lockdowns, etc. But even the official problematic CPI seems to be rebounding very, very fast under the current circumstances. And why is that extremely important? Because obviously that will greatly affect real rates.
Real rates, yes.
And we've said multiple times that 90% what precious metals, especially gold, care about are real rates. So people should really pay attention. One more comment. We are seeing not only a promise, but also leaking thoughts that the Fed might even change its mandate and make it explicitly clear that they're looking into letting inflation run much hotter and all the rest. I think this is going to be the Fed, not in essence telling everybody that they want to see higher inflation for a period of time, but in essence preparing the ground for what they think will be coming. So when it comes, they don't actually have to face the pressure for the markets to raise rates. So I don't think it's them doing some wishful thinking because for some reason they think that positive inflation, I mean, higher inflation is a good thing. I think they're in essence preparing the ground that inflation will be higher and they cannot show
they can't be blamed for it because that's what they were planning for.
Exactly.
Right,
and,
buddy?
And if they don't prepare the ground, then they will actually show how much of a weak hand they have. They're in essence, they've put themselves in a corner and they're completely incapable of doing anything about inflation, because the only thing you can do once you get inflation is the only thing that will certainly completely devastate an economy that is currently just based on money printing and handouts. So, I think it's completely preemptive what they're doing.
Yeah, I don't disagree. I don't disagree at all. And the problem is that there's only so much the Fed can do. And, when inflation starts picking up, they can only raise rates. I mean, they can, do quantitative tightening, but really, it's whatever they try to do. I think that it's gonna be a huge break to the economy. So just after, this big shock that we've had, if inflation starts going up and they have to fight it, well, they're gonna put the brakes on the economy yet again. So it's a very difficult position that they're in. Anyway, yeah. So that's pretty much it. What else is there to say? Very little. The
we have crude oil inventories coming up in a couple of hours.
Yeah,
let's see if that can actually. We had some OPEC announcements. I think they downgraded.
Yes,
today.
They downgraded the oil demand.
Yes.
They think in 2020 is going to fall by just over 9 million barrels per day. The previous one was 8.95, so slightly worse than their previous estimates. So
yeah, let's see if in combination with that, perhaps some outlier in crude oil inventories can, finally get crude oil moving, because crude oil has been coiling within this ascending channel. Its volatility has definitely dropped significantly. I think that sooner rather than later we should have like a strong move happening here as well. But as I've said multiple times, I wouldn't rule out to see like a fake move higher first, perhaps to trap a lot of people in the wrong direction at the totally wrong time before we see a much deeper corrective move lower.
yeah.
Yeah, I can have a look at the VIX, but since the conversation went in crude oil, we might as well first go through these tickers. Like we had a look at crude. Let's have a look at natural gas. Natural gas still remains above the breakout area of 205. So I still think we can perhaps even retest the level and then keep moving higher. Gold and silver, Blake more or less, covered things here. Just to reiterate that since the beginning, I said that 1815, 1820 is an area of interest. I still think that perhaps after a small rebound or even a big rebound, I think that if you get lucky to find 1980, gold retesting 1980, and you're looking for short-term short opportunities, which I'm not doing, by the way. I've explained multiple times that in this environment, I only want to be long gold and silver. And although I said that, a sharp correction lower would eventually come up. And if you remember yesterday during the webinar, at some point I said when silver was just like 5-6% lower, I said that this market is now broken. It's going to go lower. Still, I would rather not be short. And here's silver, by the way. It did break down from this ascending channel. Quite a massive move lower. I still think that we can end up retesting even 21 or even 19 and change, but I'm still maintaining my long-term bullish outlook for them. So, if you're really looking to be short, 1980 perhaps is a good area to do so in gold. And in the case of silver, 26 and change, which we did test earlier, I think was a nice area for somebody to short if you actually wanted to see some follow through. Now, there was a question about the VIX, and we might as well have a look at it again. VIX yesterday printed, and we should zoom in a little bit so you can see it more clearly. So VIX yesterday put in an outside white candlestick, which is a very nice reversal candlestick. Also a key reversal, by the way, because we did post a lower low, in this series of, candlesticks that were clearly trending lower. So
still didn't fill the gap.
No, it didn't.
The gap is filled at 18, I believe.
No, it's actually lower. It's at 17.4.
Okay.
Because don't forget, to fill in the gap, we need to
go
retest
the high of that day.
Yeah, to retest the body of the candlestick, not the wick.
Oh, I see.
So
I've always gone by the wick, even when it was a bar chart. I used the the whole bar.
No. It's the body, because think about it. The gap is between where we actually closed that day and where you opened the other day. So so the wick is not significant in this case. Okay. So it's about 17 and 17.4. We didn't make it there, and I don't think we're going to make it there, in this go. I do think that yesterday's candlestick is a big warning signal, and I would definitely advise, people not to be short.
Sell volatility.
Not to be short in this case. Keep in mind that yesterday's low was also the 88.6% fib from the lows before we had the COVID explosive move higher in the VIX.
Yeah.
Now, here's the Nasdaq. Nasdaq, clearly another negative day yesterday, but from a technical perspective, we're still maintaining the bullish bias, since we're still holding within this ascending channel. We've had a minor technical breakdown when we actually broke through this 11,000 and change, horizontal support resistance area. But in all honesty, you want to see a break from this trend line before you start getting a little bit more enthusiastic about the potential of downside. In the case of the S&P, we did have an outside black candle yesterday, but no continuation yet, and definitely no broken technical levels that can actually change the technical picture yet. Now, as I said, the VIX does send a warning message, though, and there's no denying this thing is extremely overdone, especially given the fundamental backdrop. So once again, I'm going to say that we remain in a in an uptrend here. There's no question about it from a technical perspective. There's no argument to be made. But the risk reward is definitely very, very bad in somebody trying to buy here. I mean, you wanted to buy a lot lower, it made sense. I myself was long between 24, 20, if I remember, and 28.50. But I think that being long here is just a very, very bad proposition. Let me go through some of your questions. The bad print from a few days ago makes the short side look even more attractive. Yeah. Okay, people talking about when schools open, depends on where they are. Yeah, usually here in Greece, we do open up late schools. We have a lot of summer vacations for kids. If you ask me as a parent, more than we should. Let me see. Turnaround Wednesday. Well, I think it's too early to say if it's going to be a turnaround Wednesday. I guess we're going to find out quite soon. Okay, question about cryptocurrencies. Yeah, now, about cryptocurrencies, keep in mind that here's Bitcoin. So Bitcoin and Ethereum both have had a negative day yesterday, somewhat affected obviously from the price action in gold and silver, but nothing in comparison to gold and silver. So oppositely from gold and silver, the price action in Bitcoin and Ethereum didn't even change the technical picture, which shows more something like a horizontal consolidation, which until proven otherwise should be considered a bullish consolidation that might as easily get resolved to the upside for another move higher. Keep in mind that in both cases we have broken above key resistances. Here is the long-term trend line resistance we broke above Bitcoin. It's not only, this was a trend line resistance that did pass through like two important points, and we did seem to have a reaction the third time we tested it, so it had some significance. What in my mind made it even more significant was the fact that once we broke above it, we accelerated, which more or less shows that the market did pay attention to it, and probably a lot of stop losses or limit orders were gathered up above it. That is what makes me feel it's more significant, even more than the fact that it passed through some important points. And here's the descending channel that was in essence confining price action in Ethereum for more than a year. And once we bridged through it, we had this huge explosive move higher. Too early to say what type of price action we have here. If this is a triangle, this might end up being something like a flag. So too early to determine which of the two, but it does look corrective to me. So I would expect that they will continue to the upside, Christopher. Might need to spend a little bit more time consolidating, but they should eventually continue higher. I think that more or less everything is going to continue higher against the dollar. Keep in mind, speaking of the dollar, and the first chart I'm going to talk about again, if we are to go in the FX sphere, is obviously the DXY. If you remember, since the very, very first day that we started trying to stabilize after retesting the previous low, I said that, listen, in order for us to start talking about the potential of a double bottom, in order for that a technical formation to trigger a double bottom, you first need to go through the first area of resistance. And we defined that to be roughly at 94 since the very beginning. And guess what? Earlier today, we did test 94, and so far, that area seems to be rejecting price. We ended up we started from having a rather positive day for the dollar, and so far the daily candlestick has transformed. Of course, it's very early in the day, but it has transformed to a shooting star, meaning that 94 remains a significant level. I think that a decent amount of stop losses probably is gathered up and limit orders above that area. And I would assume that unless we break above 94, nothing has changed, meaning that the only thing we can assume that we have in hand is a horizontal consolidation. It will become something more only above 94. And obviously, not coincidentally, the same thing can be said about the Euro USD, which is in most of the cases an inverse picture of the DXY, since it's it's like 58% of the DXY. But if you add on the weight of the Euro USD, other correlated currencies like the SEC, the Swissy, etc. I mean, in essence, you can understand why the Euro USD looks like a mirror image of the DXY. Euro USD did find support at the previous lows, so still not triggering in what would have been a double top in this case. So anywhere between 117 and 119, you can look at it as neutral ground, although it's not exactly neutral because, given the fact that we had quite a clear momentum to the upside following, entering this consolidation, any type of horizontal consolidation should be viewed more in the eyes of a bullish consolidation type of formation than anything else in the case of the Euro USD. So I do think that as long as we're not breaking below 117, your bias here should be neutral to bullish and not strictly neutral. Okay. Now a break below 117 will point to a deeper corrective move lower, in which case I would be looking for 116.30, 115.50, 114.50 as the next downside areas of support. And I will be actively looking for long opportunities because I do think that the dollar should be sold at any given opportunity of a decent corrective rebound. I haven't changed my bias, and I don't think I'm about to do soon. Did we get our first wave of stagflation? Stagflation? Yeah, Kirk, I'm 100% with you. I mean, I think since the beginning of seeing how they're about to handle this crisis, the chances of getting stagflation had clearly increased. And by seeing, the appetite for more and more and more stimulus, and this time directing much more of it than in the past directly to the population in some kind of form of helicopter money, I do think that the chances of seeing stagflation have substantially increased. And of course, if that proves to be the case, as we said before, that will be an amazing environment for precious metal to flourish even more. So people that really believe that the recent explosive move higher in precious metals was the end of it, I think they're very much mistaken. It's a common understanding that during bull markets is where you find some vicious moves to the downside, and during strong bear markets is where you might find some very, very strong rebounds. So I understand that people that were already biased against precious metals might be cheering this move lower and thinking that they're finally getting vindicated, but I think they're going to realize that they're wrong. I think there's a lot more to go to the upside. And yes, I do think that people don't seem to realize that the CPI is rebounding a lot faster than somebody would expect under probably the biggest recession we've had in many, many decades. But they will soon start realizing when the prints start getting closer to 2%, and then when they surpass it. So yeah, I do think this is the likely scenario that we're about to witness in the months to follow. How come helicopter money never seems to actually hit the ground? Yeah, I mean, Ziggy, admittedly, in the past, it never, not even a fraction of that money hit the ground as you mentioned it. In this case, it's going to be a lot more than it was in the past. Of course, the vast majority of them are going to stay at the top, as you very well imply and guess. There's no
I think it's because Ziggy's out there with a bushel basket catching it all before it hits.
That might as well be the case.
Yeah.
Okay, so there was a question about platinum. Nothing has changed in platinum. I said it yesterday again. 875 key support area. Watch this channel as well. I think as long as we remain above these levels. I don't have any reason to really believe that platinum is about to break down. Nothing has also changed with palladium. Palladium still consolidating in this long-term symmetrical triangle, so nothing to see here either. Copper still looks like it wants to, make another move higher. I mean, we're being supported by the 50 DMA, we're being supported by the ascending channel trendline support, we're being supported by this likely bull flag, question mark. We're going to find out. So I don't think it's a very good idea betting against copper at the moment, not from the type of price action I'm seeing, because look at what it has done. It has spent many days consolidating, in essence retracing a minimum amount of the price appreciation that we previously saw, and at the same time working out the overbought conditions, because keep in mind that we started this consolidation with the daily RSI being at 81, and we actually managed to even get the RSI down to 41. It's currently at 51, but it 3 days ago when we had that plunge lower, we actually hit 41. So bottom line, what I see is a market that has worked out the overbought conditions in time more than in price, and usually nothing is absolute, right? I mean, whenever you notice a formation and you know from experience that it works one way, it means that, let's say, 60% of the time, 70% of the times it's going to work that way. It's not like nothing is written in stone, right? But statistically speaking, and from experience, you see something and you know that it has a much higher chance of describing a specific situation. So the specific situation I'm seeing here is a market that worked out the overbought conditions over time, and that's usually a very bullish signal. Okay, Dale, we're exactly at the top of the hour, and I do have to jump on a meeting. So do we have a guest today?
Thank you, Steve. Nice rundown as usual.
Thank you.
Yeah, have a good meeting. And Miad, I'm going to get you set up here. It's nice to have you back in Face. It's been a while. Welcome back to Face, Miad. Just asked you to unmute.
Hi, Dale. How you doing?
Hey, how are you, Miad?
I am great. Thanks for having me back.
Yeah, gosh, it's been a while. Have you used Zoom before?
I did, yeah, I did. But
okay.
I had to during the pandemic, innit?
Yeah, so there's the green box that says share screen. Will show your screen and we could talk about it. I'm assuming that you have some things that you wanted to address in the markets, and glad I was able to find a spot for you. So you just click that green share. It's coming up now.
And you can see my screen.
Okay, yeah, we have pound Swiss. I know you trade a lot of these exotic crosses, so I know when people come to me and go, Dale, can you get me in? That there's something going on in the markets that you consider important. So what's the message of this pound Swiss besides it being pretty directional? What is this, a 1 hour chart? Huge range.
Yeah. Again, thanks for having me over. I think it's been nearly 1.5 years last time I've been at your show. And
wow.
gold
you
was
have more of a
bottom,
Scottish accent now than you did before.
Yeah, it's growing on me.
All right. So how have things been going? Family's all safe
good.
and healthy?
We all turned into zombies over this pandemic, and life's been very mundane. We kept things together. I think it was important to, especially the kids, because they weren't in contact with other people, just to keep them sane, take them out where it was possible.
Yeah.
We are lucky with the Scottish rolling hills here, so you got lots of places to go where you can hide.
Okay.
We did a lot of that, just to keep the kids going, really, and myself as well.
Are they going back to school in
today
Scotland?
Today was the first day back at school. Yeah.
Okay.
Which is good, I think, for everyone.
Yeah, I know a lot of parents do. It's a lot of parents have trepidation that the kids could bring it home. You know, if, like, say, for example, you live in a multi-generational home, and say your parents or grandparents were also in the house, that they'd be vulnerable to their grandkids or bringing home the virus, and they're more vulnerable. But you know, we'll see. It's definitely. I'm glad. Um, you know, this one is even worse than the last one. You know, when I was around in 1918. So, how have you been able to trade this? You know, we've had some massive moves here. Um, and you know, maybe currencies haven't been as dramatic as some of the other asset classes, but
Yeah.
you know, I'm willing to be open and hear what you have to say about this. And
First,
pound
I'd like to bring
Swiss.
up. Yeah, first I'd like
Go
to
ahead.
bring the macro view we had over the specifically starting towards middle and the end of May. We really
Yeah.
started to see Europe outperform United States in terms of CPI, which was probably the first time in a very, very long time that Euro had a better ticking CPI. Unemployment
Okay.
was lower, lower. Retail sales started picking up. So we had a lot of good, positive things going on for Europe. And of course, there came the mutual debt agreement, and the whole thing just skyrocketed. That
Yeah.
obviously helped Euro a lot over the past couple of weeks and months. And that's the trade we've been continuously building on. However, last week, things started to look a little bit less exuberant for Europe. The Euro area started to stabilize their growth, and the United States rapidly started picking up. We specifically saw that in EuroCAD. I always like to use CAD as a proxy for United States strength, because if United States is doing good, Canada is even doing better as their close trading
Interesting.
partner. So
Okay.
we tend to look at EuroCAD when United States is starting to outperform Europe. Why not Euro USD? Because in this environment, Fed is really hell bent on devaluing United States dollar. They are just bringing in so many tools and so many programs just to flood the market with dollars to keep liquidity going. I feel trading Euro USD on its own, especially on the short side, is not very it's not very profitable. Not an easy thing to do at all. Not in this environment anyway. Where if you look at your crosses, specifically if you got Canada and you got oil started to rally, you have a better understanding why we saw all of a sudden shy of a 400 pip drop just over the past 2 weeks or so. It was mainly because the economy started rotating a little bit. That's really just to understand why we came where we are. And also means if United States dollar is declining, you're going to see all the commodities rallying. Like you saw oil rallying, you saw copper rallying really hard. And there were some supply and demand constraints, but the main reason behind everything is dollar is dropping, everything else is moving higher. That's really what market is all about right now. Again,
Okay, so this is according to your work, this is a long-term turn in the dollar. We're not going to revisit par or higher. Is that your view?
To my understanding, we have not seen the bottom of United States dollar this year.
Okay. All righty.
Because of the dynamics that are in play, that continuously be in play. We started consolidating because the economy started to pick up in the United States, and it's starting to level off against the other economies. I'm going to quickly show you a chart. This is a macro overview of all the G10 economies like the United States, Europe, Japan, Australia, Canada, all the other ones. You get a quick flash look at where the GDP is, CPIs are, unemployment, and you get to see that the United States is still hanging behind with the GDP. Industrial production is a bit behind, and unemployment still a bit higher. That's why you can see all those other economies are doing a little bit better than the United States. And that theme will likely continue until the United States can bring down the slack in the unemployment again. And that will help retail, that will help CPI. Now, today we had really good CPI print from the United States. I'm expecting this to continue as a lot of money is in the rotation in the economy, a lot of people getting paychecks. And that's the same thing with all the other economies as well. But going forward, I usually use this as an overall macro view if I want to know where the next 500 pips are. That's the sort of thing I like to look at.
Okay. So the unemployment number was the most important number in there?
One of the key ones, because unemployment, by the looks of it, peaked in the United States. So it's starting to decline. Still, it's way, way higher than all the other peers. And that has got a lot of intricacies. It means there's less money in the hands of people. There's less traveling to work and going back to. There's a lot of things that the economy loses out if there's higher unemployment. So the quicker that comes down, the quicker United States dollar can stabilize. But there's a lot of other things that there's PMIs, there's service sector really picking up in the United States. That's why you saw Euro USD starting to chop about, and GBP USD as well to another degree.
Okay, thank you.
Going back to GBP CHF, there's something I wanted to show, and that's one of the reasons why I am very, very bearish on this pair. I'm gonna quickly delete my lines here. So this is the monthly view we had on this chart. I'm going to draw out where it opened in the beginning of the year, which was bang on here. And from the beginning of the year, it just continues to start dropping. One of the main reasons is that all the other economies and all the other central banks like the Bank of England and the Fed and the BOJ and the ECB, they all started to print massive amounts of money. That's the sort of thing that the SNB or the Swiss National Bank cannot keep up with. So you saw that sort of theme where Swiss franc is doing better than the GBP. On top of that, you have loads of still the Brexit risk that's unresolved and continues to get built into the premium. That's causing this to drop further. Just to really get behind why GBP CHF did not climb back like all the other ones. I'm going to also show you the.
Oh, just stay there for a minute, Miad. So when I look at the chart, you see that first wick in July? Here? In July.
Yeah.
No, last July.
Yeah.
I mean, a year ago. Go to your left. No, the red one, the low. Okay, see here. That? The next to it.
That would be August.
Okay, there you go. Okay, and there's one wick, and then go one in March during the crash.
Yeah.
There's two, and you know, I look for 3 drive formations. So based upon that, and I don't even see an RSI up there, but I could just visualize it, that there could be one more drive to complete, one more low under that wick.
So you're looking below 1100.
Yeah, that we could have. Then I think that there might be, you know, an important turn, especially since it's a monthly chart. You would probably see a lot of non-confirmations even at new lows now on momentum.
Lovely.
So, but it looks like, you know, now that I see that chart, you know, there's some pretty good pips between here and the March low.
In my opinion, there definitely is. And it's important to understand why it's happened. It builds up more confidence, and it gives myself and other traders as well the opportunity to start adding into this decline instead of trying to keep taking profits, more thinking about how much more can I make out of this trade. I'm going to also show you the GBP pound. This is the pound index, and it's obviously correlated with that, but probably a little bit more closer correlated with GBP USD. But since the start of the year, so that was in about here, pound did not manage to reclaim the yearly open. And that's the sort of thing I'm interested in about to understand why that didn't happen. So there's a lot of Brexit pre-menstrual risk in the currency, and the economy isn't doing that great anymore. So I'm likely going to see pound index starting to fall off from the yearly high levels again. That's something we look into as well.
Okay, so would you favor longs in euro pound? Do you think euro's going to outperform cable?
Yeah, definitely. Euro pound probably got more to go. But I prefer GBP CHF as I have a better understanding how both central banks are operating and how much power they really have. SNB has got so much power to print money, and BOE has got so much. They started adding negative interest rates to the toolbox. This is always like the start of something really bad. I'm imagining there's lots more bearishness into GBP, specifically against CHF. That's sort of where I like to see more pain.
Okay.
This to that, and I like to discuss something that is called the London Fix. The London Fix happens every day at 4 p.m. London time. It is a very known fact. This has been going on since the 90s. The London Fix is usually referred to the bullion fix, where they fix gold prices, but also between banks every day at 4 o'clock. They do fix forex prices as well. That is really important for money managers around the world to be able to calculate their portfolios against that specific fixed price. And what that means for market means there's usually a lot of volatility going into the fix. So I'm gonna, since I'm here on the GBP/CHF, I'm gonna scale down to the hourly chart. I'm gonna show you these red lines that represent the 4 p.m. fix at London time. And usually the hour going into it, you see there's a lot of volatility and usually high volumes. And all the papers that's been written about the London fix is more about the manipulation that happens around the fix. Nobody pays attention to what happens after the fix. How significant are those levels that are being created after that? So I started to chime more into that, and I devised a couple of more strategies, how to be a little bit more specific and detailed, and how to be able to use these London fix levels to get into trades. It is as easy as that, where you would just mark out your 4 p.m. fixed price, and it's usually the opening price which you're more concerned about, which would be on the green candle, the opening price there, or on the bearish candle would be the top there. And once we have the fixing prices, again, what happens before that is more or less irrelevant. What happens after is more important to me, and the way it moves away from the level, the significance it had in the market. Going into this week, we were pretty sure GBP/CHF will have a hard time driving prices higher from here. There's lots more interest going down the way. So
the first candle after the fix?
It will be literally bang on the 4 p.m. candle. So 3 p.m. is where the fix happens, if you may to say. And by 4 p.m. we have a price. And it's the opening price I'm interested in. If I were to go down to the minute candle, it would be bang on at the 4 p.m. the day before. Like every charting package might have the time zone a little bit different. Right now in Britain, we're operating BST, so on the British summertime. Going into October, we'll be going 1 hour back, so we'll be different again. But bang on the price where it opens there, it's the price we're interested in to do business with. And usually you'll find that specifically with Tuesdays, it sort of sets the tone for the week. You find that prices do gravitate back into that. So if I had a bearish view on Monday, I would rather wait until Tuesday, see what happens, what sort of price action I'm going to get out of this, and try to get into cheaper entries before it really starts taking off. Now here we had a decent drive lower, and you tend to see these cycles come and go all the time, specifically on a weekly basis. Depending on what the Forex calendar is offering you, you see a lot of opportunities around the fixes where you can get cheaper entries, as opposed to where you think like, oh, I might want to short on a breakout. It's usually smarter to wait for a revisit onto the London fix level, as there's been a lot of business going into the level. There's a lot of banks' interest into specific prices that are surrounding the level. Now, London fix strategy that works with almost every FX currency, but just looks so much crisper, so much easier to trade with pound FX pairs, because it's just much clearer and much easier to identify as well.
And your comment about Tuesday, would that be in line with, that old timers tradition of a turnaround Tuesday?
There might be. There's another thing that nobody talks about. That by Tuesday, by the end day of Tuesday, CFTC starts collecting data for COT that are then published on Friday. So we tend to see a lot of bids and offers going into just the fixes. Just everybody balances their books and they just give exactly the data they wanted to give to the CFTC. That seems to be one of the cool things as well that I've been tracking. Tuesday seems to be a key day to wrap up business, if you may to say.
Okay. Nice. You're really delving into things that most people would never even think about.
Yeah, again,
I wouldn't think about, what's a candle doing around the fix for a trade. There's no particular point in time. I would say the only time I probably use is, potential reversals on Tuesday. But that's interesting. Every day you have potential trade setups based on the fix. First time I've heard it. Yeah.
There's another last thing I'd like to talk about, which is Euro and the Swedish krona. Probably not a currency everybody loves to trade, but just again, we are continuously going to hammer lower, mainly because Sweden economy is doing better than Euro. One of the other reasons is as well, with the approval of the mutual debt, countries which are within the Euro area but not sharing the common currency, they still need to pay into it, right?
Okay.
And they need to pay a certain amount of their GDP into the mutual debt. Now those countries will prefer they have a stronger currency, so they have to pay less into the euro, if that makes sense. But we've seen most of those currencies that are in the euro area, like Eurosec, or even the Czech krona, even NOK, all of them, they continuously started declining because all those countries prefer to have a stronger currency against euro. So when the time comes when I need to pay into that debt, they basically will need to pay less, if that makes sense.
I get it. All right. So we're not going to let a year and a half pass again, my trading warrior brother. You
hope
have
not.
Another chart to show. Go ahead.
That would be all. No, that would be all from my side.
Okay. Well, why don't you let people know what your business model is and how they could get in touch with you, follow you, etc. If you want to show your website.
Yeah, thanks for the setup. So what I do lots of macro analysis and then try to bring technical into it, just so when we're on top of trends, we don't just close the trades, but we're able to add into that. So when you go on my website, Speculative Trading, right now I do have an offer for the London fixed strategy, which I talked about. Just do lots of more videos about the swing trading ideas and daily trading ideas. They're all into that package, which I will be all releasing by the end of August. But if you pre-order now, you can snatch yourself a pretty decent discount.
Okay.
That would be all for me.
You want to show it? You could show your website if you want to put it up there.
That is the offer page itself.
Oh, okay. All right. You want to show it?
Can you see my screen, or is this
You'll
still the
probably
chart?
have to do. Yeah, I'm still seeing Euro PLN, so you probably have to stop sharing and make it a new share. Is my guess to show your website. There you go.
So that would be the
strategy
that we're able to get into the videos that will be released by the end of August. And if you pre-order now, get a decent amount of discount. Again, lots of strategies, not just for the day trading, but also swing trading, and specifically when market starts momentum driven, how to use those fixes to get into cheaper entries.
Okay. Well, you could find Miad at on Twitter at ZFX Trading. And his website again for that offer is speculatorstrading.com. Thank you, my trading warrior brother. I hope you have a great summer trading season and everyone stays healthy and pips just continue to roll into you and all your clients' accounts until I talk to you again.
Thanks, Dad. Thanks for having me, and everybody have a good week.
All right, Miad. That's Miad Khosravi, everyone. And that's a wrap for us. So I'm going to be shutting it down. You're very welcome. Oh, you're welcome, Brock, Sinatra, Gorkum, Alexandra. You guys have a great day. I have another Dana Lyons will be with us tomorrow. Dana's top-notch analyst. So I'll see everyone tomorrow. Good hunting the rest of the day. And don't just count your pips, count your blessings. See everyone mañana. Take it easy.